In this video, if you are a cryptocurrency investor, we have the absolute best information out there right now. There is a new CoinGecko report out, and it goes through the industry in detail. No FUD, no narratives, just data. So I'm going to go through the absolute most important points of this report in this video. We're going to go through each of these slides right here and see where the industry is. If you want to see all of this, obviously watch this video through. I'll leave timestamps down in the description below as well. Before we get started as well, make sure to pick up your bonuses. Bybit, Binance are doing great bonuses for deposits right now. So if you're new on these platforms, just make a deposit and you get those bonuses. Each quarter, CoinGecko release a report on the real fundamental data of this industry, and we can go through it right now to see what parts of the industry are growing or falling away so we can make better decisions. This is CoinGecko's report, so you can check it out yourself on their website as well, and we'll go through it here. The first part is, as you can see, crypto dominance, right? So this is each of the kind of top cryptocurrencies and how they are performing. As we can see, really, it's just a sideways move. So no one's really making any headway on any other part of the industry. Bitcoin really keeping as it is, as you can see here, and Ethereum as well. So everything's settled. And what I would suggest we're in right now in terms of Q3 2022 is really just that sideways movement. It seems like a lot of the most volatile moves for crypto have kind of finished right now in terms of, the price movements. In fact, Bitcoin's been moving sideways for months now. And so has really Ethereum. Even with the merge, it kind of went up on that and then has come back. But as you can see, in terms of the competition between each individual coin, we're really seeing, mostly flat across the board. There are also some interesting anomalies right here in terms of gainers in the top 30. So I'll just show you that without me. As you can see down here, ETC was one of the top gainers. This is Ethereum Classic. Now, Ethereum has moved over to proof of stake, and so what you've seen is a lot of miners going over to that. I wouldn't read anything into that. I think that's probably a short-term blip, and so, yeah, probably good to short ETC rather than go long. I think over the long term, that's probably best. Now, Atom has done quite well as well. They've actually come out with reports that they're going to be changing their tokenomics for the better. So that's definitely some good news. Atom will be essentially becoming slightly harder, so less inflation. So that is obviously a good focus. And then Uniswap as well have actually just raised funds. And so they've raised a lot of money to obviously fund further development. And we'll see later on in the video why that's important as well, because Uniswap really are the absolute main exchange in terms of value and dominance of the exchange flows. So it seems like Uni are kind of picking up a lot of the exchange flows right now during the bear market. The stronger getting stronger and some of the weaker players just really falling by the wayside. The next slide shows price performance of a few sectors, and it seems like DeFi is holding up really well. And I think the main reason for this is that we've seen so many centralized blowups during this downturn. This is the Lehman Bear Stearns moment for crypto, and you just see these centralized exchanges where, you give them your crypto. We're talking like Celsius and Voyager and even BlockFi having trouble, right? A lot of bailouts there from FTX, and people are saying, well, if I give you my crypto, what are you doing with it? What's your balance sheet? What's your P&L? Where are you actually lending this out? No one knows. With DeFi, that's the whole point of decentralized finance, is that you know exactly where the coins are going, you know how the yield is being produced, and you can verify it on chain. And I think DeFi has really come into its own here. Now, I own some of these tokens, these DeFi tokens. You've got Uniswap, Aave, really the two main, the two main ones on Ethereum, and they are really sucking up a lot of the, the flow of what's left right now. DeFi flows and the amount of TVL has come down a lot, but everything's relative here. And what you're seeing is strength on a strong ecosystem, with Uniswap and Aave really shining as very strong ecosystems that didn't blow up, and everyone's coins were just on there and doing their thing as usual. So I think that really is, if you really take a step back and you look at this stuff, DeFi is so important, and it's definitely performed well considering. Now, the only thing that I have in case of DeFi is it's regulation, right? There's so much talk about regulation here. A lot of people are arguing about this now in terms of what's going to happen. Will KYC have to come in? How is this going to be regulated? And I think that is, a potential marker on the downside for DeFi tokens. Are they going to be listed as equities, crypto equities? How is the regulation going to affect them, either positively or negatively? But no one can say that DeFi didn't do its job properly, and I think that's why they've bounced up. Now, as you can see, just strength here as well. Ethereum BNB. Now, obviously, XRP is a bit of an outlier here because of the court case, and ADA not doing too well, but definitely a lot better than it did in Q2. Now, coming down to play to earn games, this whole Web3 narrative, again, these are narratives, right? It's going to get crushed, and the reason is because of the macro, and narratives do not do well because there is just no discernible fundamental value to hold on to. Uniswap has fundamental value. Aave has fundamental value because they charge fees. Now, Uniswap don't pass any of those fees over to token holders, but just the read through is that could happen at some point, right? So they make money. They actually make money as a protocol, and so they will hold up better on a relative basis versus these which are just loss making and ran on a narrative. So that's how I read these kind of different price differences. Where next for Bitcoin and crypto then? It looks like a lot of the leading and strong protocols potentially look to be bottoming out here in terms of their price movement, at least from Q2. But where do we go further? Well, as you can see from this chart, we're really almost 1-for-1 correlated with the stock market right now. And that makes a lot of sense, right? The Fed is in charge and they're telling everyone where the market's going, which is down to sideways. But as you can see, all of the stock market, the Bitcoin market cap, the crypto market cap seem to be kind of moving sideways here. So a lot of the price movements downwards seem to have slowed at least, but that is obviously dependent on data going forward. But if the stock market is continuing to have trouble, then it looks like Bitcoin and crypto are not going to potentially outperform it anytime soon. Correlations here amongst the highest they've been. Now, something fundamental to Bitcoin as well, as you can see the hash rate. This just shows me how many people are coming onto the network and how many higher end players are coming onto the network. Now, I know that Intel, they actually came out with a Bitcoin mining chip in Q3 this year, and it looks to be going out to clients. Now, I've not seen too many news articles about this, but Intel was saying their first mining chip was coming out, and it looks like it's going to very large clients, potentially US oil and gas players and energy players. I know a lot in Texas is happening. And so what we're seeing is essentially the professionalism going up, large institutions and corporations coming on, pushing the Bitcoin hash rate even higher, even in a bear market. No doubt Bitcoin and crypto have performed really badly this year in total, but have a look at Q3. This is really interesting. Now, we know Bitcoin and crypto is way more volatile, right? So it just has a very high beta to the market. So if the market's down, you're going to see Bitcoin down, right? But as we can see, the Q3 2022 return, we're actually seeing a surprisingly outperformance of BTC versus most other asset classes. The S&P 500 itself is down 5%. Bitcoin is only down 1% in comparison. So if you're a Bitcoin holder in Q3 this year, you've outperformed the stock market by 4%. In fact, even the NASDAQ is down 4%. Now, why is this? If you think about the S&P and the NASDAQ, these are stocks. And they have earnings, some of them anyway, not all NASDAQ stocks, but they have earnings, and earnings are getting crushed. There's going to be a huge recession. So remember, with Bitcoin, there is no earnings for Bitcoin. Bitcoin is, I like to say, a market index with no earnings, and it trades a lot more on interest rates and the money supply. Now, if you look 6 to 12 months ahead, where do people think the market is going to be? People think we're going to be in a recession. Now, what happens in a recession? Governments stimulate the economy, or try to anyway, and central banks stimulate the economy by lowering rates and potentially easing the money supply, trying to spur the creation of credit. It's exactly the situation that Bitcoin likes. So as a long-term investor, what do you do with BTC? When the price falls like this every 4 years or so, or when the economic cycle falls, that's when long-term investors get to work and start with dollar cost averaging. Now, as you can see, Bitcoin has outperformed, with potentially the market saying here, you know what? Conditions in the market haven't markedly changed really for a few months. Interest rates have almost gone up to where most people think the terminal rate will be, right? Around 4.5%, 5%. That's where the 2-year is right now. The 2-year in the States is, let's say, around 4.5%. If the Fed tells us that they want rates to be around 4.5 to 5%, then there isn't that much left in terms of hawkishness from the Fed in terms of interest rates. So, as an investor, you look forward, right? Now, the S&P, they could still potentially have a way to go with earnings revisions to the downside. And if there's a recession, those earnings comes down. But if earnings come down, that's when people expect the stimulus to occur. So it's incredibly difficult to try and time these in the market, these swings in the market. But BTC is not the S&P 500 and NASDAQ. There is growth in the network, and it's a different asset to those. It doesn't have earnings. So it's a general market index that's looking at money supply and interest rates as well. So very difficult. And of course, Bitcoin is just smaller as an index than those, and it can grow much faster. It's still in that growth phase, where the S&P and the NASDAQ is obviously much more mature. Looking at crude oil, this is another marker of a huge amount of recession, right? Crude oil is down 25%. Remember all those people on TV that were saying buy the crude oil stocks? Well, yeah, you may get shielded by, let's say, a 7% dividend. If crude oil is down 25%, looking forward 6 and 12 months, are they going to be in the best spot? Do you really want to hold those? You may have to time out of those. And so market timing is so difficult. So I like to take a step out and look at really secular trends, and Bitcoin definitely is that. Gold underperformed, no good to be in that. The dollar index obviously still strong. 6 to 12 months out, is the dollar still going to be as strong as it is now? Probably not, in my opinion, right? We're getting towards the end of this cycle, in my opinion, when something breaks or the economy falls. So as you can see, if you're in Bitcoin, you've pretty much outperformed all other mature market currencies. The yen, the yuan, the pound sterling, the euro have all underperformed Bitcoin this quarter. So interesting. Yes, year to date, it is the worst performing asset, but it also can very easily jump up when rates start to change as well. And so, yeah, you have to sit on that loss if you were buying in at the top, but dollar cost averaging here, it looks to be turning potentially anyway. Q3 seems to have been a better performance for BTC. Let's move on to Ethereum and how this is done after the merge. Again, strong platforms do come down, but they show relative strength compared to weak platforms. And that's what ETH is doing right now. So yes, weakness, but relative strength. And for me personally, I want to invest in strength. I want to invest in winners, because winners win. And that's what I want to be invested in. So as you can see here, you have the liquid staking protocols now. Now remember, ETH has moved over from proof of work to proof of stake, meaning it now pays a yield to us investors rather than miners. Lido is the leader here, and Lido has done spectacularly well. Now that makes sense because Lido is a staking provider for Ethereum, and obviously Ethereum moving over successfully to proof of stake is obviously successful for Lido, right? Being the market leader. So that makes through. And anyone in Lido has done pretty well over this quarter. Now, as you can see, staking just, pretty much done at this point. Anyone that now wants to stake is staking, because there's really no risk in staking anymore. There's a little bit of risk here using a staking provider because there's still an unlock, but we won't get into that in this video. Lido, absolutely the leader. And then you have Coinbase here and Kraken and Binance, obviously. Now, again, I've got nothing against these three platforms. I think these three platforms are about as trustworthy as you can get in crypto, especially Binance. Personally, I use Binance a lot. Lido, though, is that decentralized player. And so a lot of people, again, moving away from centralized everything, thinking, well, we don't know what's going on, moving over to, smart contracts, essentially. So definitely good for Lido here. They continue to be the market leader, not just in Ethereum. As you can see, there's a 95% reduction in average daily net emissions. What does that mean? So, all of the money, all of the ETH that was going to pay for security to miners is now not going towards them, and Ethereum can afford to give us some of those tokens. So as you can see, since the merge, this is the issuance of ETH. Okay, so that going up is not good, right? We don't want to be diluted. We don't want our investment to be diluted, and it was doing so. Now, there's reasons for that, to obviously have the network bootstrapped. As you can see after the merge, the issuance of new coins has basically flatlined. Now, that's a good thing. That's great news for investors. It means that the yield that we're getting is real yield and we're not getting diluted. As you can see at the same time, during the bear market, the amount of transactions has actually pretty much stayed really strong. I'm really pleased with this as a smart contract platform. You're looking at any sort of strength in a bear market. The number of on-chain transactions here, really, really great. As we can see though as well, this is ultrasound money. So this tracks the supply of Ethereum. Again, after the merge, the supply actually kept going up. As you can see, we reached what seems to be a potential peak here, and then we started moving down. This is Ethereum being taken out of existence every time, and if we come down to this line, it will actually start going negative from the merge. But as you can see on this time frame, Ethereum is now deflationary as an asset, so there is, according to the current supply schedule, a negative balance of 0.34% each year. Now, that doesn't mean anything for an investor, right? Because you're in this not for 0.34% per year. So just to put it into context, the real big difference is this was very high, right? Like 5% a year or something like that, 6% a year. So they've taken all of that supply growth out. That means that Ethereum now, can be seen to be paying a proper real yield. So if you stake Ethereum and you're getting 5%, you know that is 5% real yield, and you are lowering your entry price every year that you get that 5%. So that's what Ethereum is, and Ethereum is still the most dominant smart contract platform there is. But there are many competitors which will compete for market share, but the market share will grow over time. As you can see here, Lido really just blew up everything in terms of DeFi. But in Q3, right, we're seeing DEXs and oracles and lending also just see a little bit of a bounce potentially from lows, which is really good. Ethereum is by far and away still the most dominant platform for decentralized finance. Also great to look at the general health of crypto is how much trading or how much trading volume is happening, because obviously the more the better with this. And yeah, we've kind of come down, but it looks to be a potential low point in the summer. That makes sense as well. Summer trading volumes are always lower, and then you get these higher volumes throughout winter, especially in the northern hemisphere anyway. So as you can see, we've kind of flatlined here with trading volumes. Now, of course, with volatility to the upside or downside will increase volumes. But this is going to depend on the price of Bitcoin. And if we actually do bottom here or potentially have some sort of upswing, Binance are just so dominant in the industry with now over 50% of trading volumes. I think they did really well throughout the whole scenario that we've had with many platforms blowing up. Binance were just absolutely strong throughout the whole thing. And some other platforms, for example, Bitmart and Upbit, which are suggesting that some OGs are actually starting to trade again, or they're not being crowded out by newcomers and new retail investors who potentially have been sidelined here and are not trading. These are kind of OG platforms that are, a more a percentage of the current trading volume. But Binance is just by far and away the dominant leader by centralized exchanges. And then you have Uniswap here again, around 64% of decentralized exchanges, and with much lower volumes, as you can see here for DEXs in general. Uniswap is an absolute behemoth here. And then you've got Dodo, which I don't even use, PancakeSwap on Binance Smart Chain, which has a lot of gaming tokens as well. So that's a part of the industry with kind of blockchain gaming, that sort of thing, where, you can get pockets of areas which are actually quite profitable that don't only depend on Bitcoin and Ethereum. So again, the strong assets will come down, but if they are strong and they have a lot of this market, then during the next bull run, they are going to perform very well as well, as the weaker players, get marginalized and never come back. And so, yeah, strength and winners, they always win. Also, a really big data point here is the strength of perpetual swaps or crypto futures. Obviously, in a bear market, what are you going to do with your Bitcoin and ETH? Well, probably going to hodl, probably going to stake it or lend it or try and earn some passive income and just wait, right? But with perpetual swaps and futures, you have the ability to go long and go short. And so you can see here, a lot of traders have taken massive advantage of the downswings in price to actually potentially short the market, right? Because you can sell, for example, Bitcoin or ETH without having to actually sell your actual coins. You can go into the futures market and take a short position by benefiting from a price going down. So you don't have to sell your crypto. You can just trade that in the futures market. Really big relative strength for crypto futures here. Binance, OKX, and Bybit. Bybit have actually added a few percent as well in terms of futures swaps. So that's what people have been doing during Q3. Looks to be trading futures, trying to eke out some yield from the market that has been actually relatively quite somber over Q3. If you do trade crypto, those links in the description do get you the deposit bonuses on crypto futures. So check them out if you want. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.